Hi there, welcome to kneppyinvests. Time for another technical update, 2nd of April 2023 edition. I'll be focusing on 9 ASX companies in today's video, including a few that I have not looked at or featured in a video before. So that's quite exciting in and itself. But the featured company in today's video is EML Payments, and I have featured this company quite often in my videos in the past. And the last 2 years has not been kind to this company and its shareholders. In fact, 2 years ago, in April 2021, the market cap of this company was $2 billion. Now it's struggling to stay above 200 million. However, in saying that, the share price did rally 31% on the last trading day of the month on March the 31st. So we have a look at why the market got excited about EML Payments. And the other 8 companies, ASX companies, I'll be looking at in today's video include 2 companies I've not featured in one of my videos before include Fleetwood Australia, maybe just Fleetwood, and Impedimed. And even though I have not looked at these companies before in one of my videos, I've actually followed both these companies, not too closely, but I have followed the fortunes of both these companies for over 10 years. CTI Logistics, I have featured this company a few times in my videos before just because of the chart and the share price in a beautiful uptrend, but we have just seen the share price pull back a little bit. So this little pullback in the share price could be a good time to think about taking a position in this company if you are bullish about the future of CTI Logistics. And I'm not sure if I have featured Jervois Mining before. I did actually have to look up the pronunciation of that name, but the share price has taken a massive dive over the past year, and the share price fell a lot the other day because of an announcement from the company. I think it fell something like 40% one day and about 10% the next day. So I'll have a look at why the market decided to sell off on Jarvois Mining. And the last 4 companies we have a look at include 3 companies I have featured before in my videos. That's including Magnus Energy Technologies, and the share price has decreased to a really important support level. That's why I've included this company in today's video. Reliance Worldwide Corporation, just because of the chart and potential breakout, looks like the share price of that company is trying to move into an uptrend. And that's also true of REA Group. Now, REA Group was once my longest holding. Then I decided to take some profits when the share price got up to like $160. Now I am interested in taking another position in this company because I am quite bullish about REA Group, not particularly around the Australian operations, but around the potential, what they have going on in India. And the last company I'll be looking at is a company I have not looked at before, a recent IPO, and I've just decided based off the chart, it's time to have a look at MLG Oz. Today's featured company is EML Payments, and this is the 2-year daily chart. The reason I wanted to show you the 2-year daily chart is because 2 significant announcements happened in this period. The first significant announcement happened on the 19th of May 2021 when the company first received the first correspondence from the Central Bank of Ireland in regards to possible laundering, stuff like that. Central Bank of Ireland was a bit dubious that EML Payments, particularly around that acquisition this company made, I think it was PFS, they weren't quite sure whether PFS in Ireland was countering money laundering, that sort of thing. And on that particular day, share price fell something like 50%. And that really shifted sentiment in this company from being positive because the share price before this announcement was as high as $5.75. And the market cap of this company was $2 billion. Share price fell 50%. Sentiment shifted from positive to negative, and share price just went into a downtrend. And then in April of last year, 26th of April last year, they released a profit downgrade. And profit downgrades are the worst sort of announcement a company can issue. And the share price dropped 38% on that day. And the share price has kept on falling. Now, the share price did rally 31% on the last day of March, the 31st of March. And the reason the share price rallied like that was because they released a Central Bank of Ireland update and they maintained guidance. I think the market was expecting a profit downgrade, and that's why the share price rallied 31%. So the announcement wasn't necessarily good news, it was just not bad news, and that's what the market was expecting. So the share price and the market reaction is all based off the expectations and how different the announcement is to market expectations. So it doesn't have to, the announcement doesn't have to necessarily be positive or negative for share price to drop or rise, it has to be different than the market expectations. That's very important. The market was expecting bad news. They didn't issue any bad news. It wasn't necessarily good news, and that's why the share price rallied 31% on pretty high volume. Now let's have a look at the last 1 year in EML Payments, going back to April last year. So this is going back to when the share price dropped 38% on the 26th of April 2022, when they issued that profit downgrade. And that really sort of reinforced the negative sentiment in this company. You can see the share price dropped a lot. In fact, the share price closed on that day at about $1.65 and kept on dropping. So even though the share price was significant and the valuation of this company was significantly lower than previously, the sentiment in this company was so negative, we didn't see any bounce in the share price, which is unusual. Now, since the last negative news, sort of negative news, which would have been the AGM back in late October, when the share price did reach a low of about 39 cents. Share price has been going sideways. We have seen a period of consolidation, which makes me think there is potential that the last of the bad news, the really bad news, has come in for EML Payments. But even though the share price did rally 31% on this, not bad news announcement from the company, the share price rallied into the moving averages. So there's still a lot of resistance moving forward for this company because of all these shareholders who have bought in at higher prices in the past. And that's why a long consolidation period is really healthy. So all those shareholders who have bought in at high prices in the past have had their chance to sell out. And you just want new shareholders. You want new shareholders who don't have a jaded opinion of this company before the share price can move higher. Another way the share price can move higher is if we get clarification around this central bank of Ireland issue, or the company releases some really good, healthy financial news. In fact, that would be the best news from this company. Now on to Fleetwood. This company has a ticker FWD, and they listed in 1987. And I started following this company back in 2011 when they had a market cap of about $800 million. Share price was something like $20. Times were good for this company. Now, they service the modular, community village, and RV sectors. So they create those sort of things. A lot of times, a lot of those things they do create those modular and community village are for the mining industry. So you would expect that when the mining industry has some tough times, this company will be negatively affected. And that's exactly what happened to Fleetwood in 2015 and 16. Share price fell from $20 all the way down to a low of $1 in 2016. And this particular chart is a weekly chart going back to 2015. So it doesn't include when the share price was $20. So I do recommend having a look at the weekly chart going back a little bit further. You could be able to see when the share price dove from $20 all the way down to $1. Now, the current market cap of this company is just above $100 million. Now, even though it's just above $100 million, this company has almost $500 million in revenue, but they do exist on really, really low margins. The operating margins are below or have been below 8% over the past 7 years. So all it takes is one negative thing to happen to this company, and they will be unprofitable. In fact, if I remember correctly, they were unprofitable in financial year 22, even though they had $500 million in revenue. So I'm usually not that interested in companies with really low margins because of their fragility. And definitely Fleetwood has that fragility within its business model. So the only reason I might even consider buying a company like Fleetwood Australia is the chart, is technical signals. So if you have a look at the weekly chart, there's one noticeable thing about where the share price is right now. It's heading towards a really strong support level. And that support level or sort of range is between $1 and about $1.15. If we go back to the lows back in 2016, that's the share price we saw back then. And then the share price reached that level again during the COVID-19 financial panic. And right now, the share price is moving towards that support level. So that's the only reason I would even consider taking a position in this company, because I don't consider Fleetwood to be a high quality company just because of their really, really low margins. Now to a company that I have featured in quite a few of my videos before, and that is CTI Logistics. And one of the reasons I've looked at this company and followed this company, but I've never taken a position, is just because of the chart. A really beautiful looking chart, even though the shares in this company are illiquidly traded, that doesn't faze me at all. Now, if you do listen to Oz Biz the Call, most of the commentators in that show always talk about how illiquid a company is, and they would never buy shares in the company because they're so illiquidly traded. But we as retail investors shouldn't be concerned about that, because usually we're not going to buy many shares. Liquidity of a company is only a concern for fund managers who want to take a big position. So CTI Logistics is a small company, $123 million market cap. Now, right now, even though share price has increased by a fair bit over the past few years, the PE of this company is about 6, and the EV to EBIT is about 6 as well. So the market is not convinced that the growth in this company can continue. So this company has experienced 10% revenue growth the last 5 years. And not only that, this company has seen expanding margins. So things have been good for this company. And I think the market is wary, is a bit dubious whether these good times can last for their company. And that's why the valuation, the PE and EV to EBIT, are so low right now. But if you do believe this company can maintain the momentum they've seen in their business, then this company is really cheap right now. Not only that, the reason I decided to feature this company in today's video is because of the pullback in the share price we have seen over the past 2 months. The share price reached a high of about $2.20 at the end of January, and the share price has come all the way down to $1.55. So a nice appreciable decrease in the share price. And right now, the share price is right on the 150-day moving average. And even though the share price is well above the trend line, which is that sloping dashed line, because it's right on the 150-day moving average, which tends to be a pretty good support level for companies in an uptrend, now could be a good time, if you are bullish about the future of this company, to think about taking a position in, or adding to your position in, CTI Logistics. Now onto Jervois. Now onto Jervois Mining, and this particular chart goes back to July 2020. But before I talk about the chart, and it's a very important chart because we have two noticeable trends in the share price. I would consider Jervois Mining to be a low quality company, and for low quality companies, trend in the share price is the most important thing. I don't care about the value, I only care about the trend. So I'll talk about that in a second, but first, what does Jarvois Mining do? This company is a cobalt nickel producer explorer with projects in the USA. That project is called the Idaho Cobalt Operation. Projects in Australia, Brazil. They also have a cobalt producing mine in Finland. Now, when the share price reached its high in April 2022, so about 1 year ago from when I'm recording this video, the market cap of this company was $1.4 billion. But since that high in the share price, when it got to around $1, share price has dropped from there to 6.6 cents. So a greater than 90% drop in the share price of this company, which means the market cap of Jarvois Mining right now is $130 million. Now, it's surprised to see that this company does have operations. They are producing revenue. In the last financial year, they produced $354 million of revenue, and that revenue was in US dollars. But they were loss-making to the tune of $55 million and were not operating cash flow or free cash flow positive, which is a concern to me, that you can produce $354 million of revenue but be loss-making and not cash flow positive. Now, on the 29th of March, they announced that they were suspending the final construction at the Idaho Cobalt operations due to low cobalt prices and inflationary impacts on construction costs. Share price dropped subsequently 42% on the 29th and a further 12% on the 30th. We did see a bit of a rally on the 31st, up about 11.9%. But the share price, the market hated this bit of news. That's why the share price dropped a lot. And the share price fell to 2017 levels. So the last time the share price was this low was way back in 2017. But back in 2017, when the share price was this low, shares on issue then was 120 million. Shares on issue right now for Jarvois Mining is $1.6 billion. And who knows, they might have to raise more capital, because even though they have a producing mine, they are still loss-making and are still burning through cash. Now onto the chart, and a very important thing to note about this particular chart. There are two noticeable trends in the share price. The first trend is a trend you want if you are long a stock or a company. The first trend was from August 2020 to around the middle of 2022, and that's an uptrend. Share price went from about 20 cents to $1, just short of $1 at their peak. So that's a nice five-bagger in a fairly short period of time. But then you'll notice the sentiment shifted halfway through 2022, and the trend shifted as well. And the share price fell from that high of $1 to 6.6 cents. You also notice that in the downtrend, the share price decrease was more accelerated than when the share price was in an uptrend. And that's because fear is much more powerful than greed. And that's why when we have a downturn in the market, the general market, that's why we have a bear market. It tends to not last as long and tends to be fairly quick and quite powerful. But usually in bull markets, it tends to be a very slow, grinding march upwards. It's not quick. It tends to be very grinding slow because fear is much more powerful than greed. So the most important thing to take away from this particular chart is don't fall in love with a company, particularly if it's a low quality company like Jarvois Mining. So if you bought in the uptrend just because the share price was an uptrend, say at 40 cents or 50 cents, hopefully you sold out when the trend and the sentiment shifted from positive to negative. Now on to Impedimed, and I'm going to try to pronounce what exactly they do, their technology. So they design and manufacture medical devices employing bioimpedance spectroscopy, BIS for short, technologies. So I'll just say, if I want to talk about their technologies in the future, BIS. Now, I started following this company about 2013 or 14, around about the same time as Nanosonics, because both companies entered the ASX 300 at the same time. And back then, I was in Australian Super, and I could only buy ASX 300 companies. So I bought both Impedimed and Nanosonics at the same time. Then I had a closer look at Impedimed and decided to sell that company because I think the market was getting a little bit ahead of itself at that point in time. So back then in 2016, the market cap of this company was 650 million. Now it's just under 200 million. And one of the reasons why the share price of this company has struggled over the past 7 years is because the increase in revenue has been really slow. So back in 2016, they had $6 million of revenue. Now it's up to $11 million. And also this company burns through a lot of cash. So shares on issue have tripled from 330 million to over 1 billion. But on the 27th of March, the share price increased 111%, which is a significant increase in the share price in 1 day. You can see the share price increase a lot. And after that increase, the share price has gone sideways, which is telling me there is some strength to this announcement. So this announcement was National Comprehensive Cancer Network, NCCN, released a new version of the NCCN Clinical Practice Guidelines in Oncology for Survivorship on the 24th of March 2023, which now, for the first time, includes BIS. So this could be significant for Impedimed. You might say it is definitely significant for Impedimed just based off the market reaction. So that's the only reason I'm taking notice of Impedimed right now, is just because of this particular announcement and the very fact the share price increased 111% in 1 day. Now to Magnus Energy Technologies, and there's one reason I wanted to feature this company in today's video, and that's because of where the share price is right now in relation to a really strong support level that was set up back in July 2020. Now, before that date, we saw sort of negative sentiment in this company. Share price was falling, fell all the way down to about 5 cents during March, April 2020, during the COVID-19 financial panic. But then a little bit of hype came into this company in, say, May, June, July of 2020, and the share price moved into a nice uptrend. And a lot of hype, a lot of positive sentiment behind this company drove the share price to a high of 75 cents. But that positive sentiment and that hype has sort of waned away over the past few years. But we'll say about 27, 26 cents is a strong support level for this company, because we have seen the share price hit that level twice in the past 2 years. First time was in July 2021. Second time was in July 2022. And right now we are seeing the share price hit that support level. Now, the reaction from the market upon the share price reaching the support level is going to be really interesting, because the share price has fallen by half over the past 2 months. So no doubt this company is oversold right now, which means I wouldn't be surprised to see a bit of a bounce off this support level over the next few weeks. Now let's have a look at the daily chart, because what's happened in the last 2 months has been really intriguing when it comes to Magnus Energy Technologies. And I just want to focus on the last 2 months because they did announce an offtake agreement in the middle of February with Tesla. Now, the market initially got excited on this particular day because the share price was up about 25% at one point in the day, and then we saw a lot of selling come in. So 50 cents was that high, and the current share price is about 25 cents. So the share price has halved since they announced this offtake agreement with Tesla. And the market cap right now is around 250 million. But you can see the share price just hovering around that support level at around about 26.25 cents. So the market, or you could say there's a fight between the bulls and the bears right now. And who's going to win? Who knows? Because the selling has been quite strong since they announced this offtake agreement with Tesla. And no doubt the shares in this company are oversold right now. So I wouldn't be surprised to see a bit of a bounce. But because of that negative sentiment, whenever the buying comes in, we do see a fair bit of selling. So fairly high volume in the last 5 trading days. So even though I wouldn't be surprised to see a bit of a bounce, wouldn't be surprised to see the bears win as well and the share price collapse from here. Now to Reliance Worldwide Corporation and this company and REA Group, the next company we'll look at. The main reason I wanted to feature these 2 companies in today's video is because we are potentially seeing a shift in trend in the share price. I'm a little bit more confident about REA Group. I think a few things still have to work out for Reliance Worldwide Corporation, but I do see sentiment starting to shift for this company. Now, Reliance Worldwide Corporation has a market cap just under $3 billion. Their PE ratio right now is 14. EV to EBIT is around 12. And even though this company over the last 5 years has seen revenue and earnings per share growing at more than 10% per year, I think if they can continue growing this company at such a rate, a PE ratio of 14 and an EV to EBIT around 12 does seem quite low for this company. So potentially good value, and not only potentially good value, we are seeing starting to see a potential shift in the trend in the share price. Now, the share price was or did reach about $2 or $3.70 in February, early February of this year. So if the share price can get above $3.80, that means the share price would be at least a 6-month high, and that is positive for this company moving forward. So we are starting to see a potential higher high, higher low setup, but I need more confirmation when it comes to Reliance Worldwide Corporation. But it's just the fact that I think this company is potentially good value if they can continue to grow at the rates we have seen over the last 5 years. Now to REA Group, and I am thinking about taking a position in this company. At one point in time, a few years ago, this was my longest held stock, and then I took profits when the share price got up to, say, $170. I forget exactly when I sold out. Share price has pulled back, but it does look like the share price wants to move into an uptrend, which is a little bit surprising because of the state of the property market. But again, the market is forward-looking. So this could be a sign that property prices might start rebounding. We might see some more action within the properties area of Australia. So the share price right now is at $138. The last time the share price was this high was way back in March of last year. So we are at a 1-year high at the share price. And the share price moved above the previous high we saw in August last year, which is a bullish move. So we are seeing higher highs, higher lows for this company. So share price is moving into an uptrend. Not only that, I am quite bullish about the long-term future of this company, particularly their Indian operations. If they can monetize their India operations, I think this company could be significantly larger in 10 years' time. Last company I want to look at in today's video is a company I have not looked at or featured at before. Now, this is MLG Oz. So even though Oz is not in their logo, I'm pretty sure Oz is a part of their name. This is a mining services company that listed on the ASX in April 2021. And the share price has been in downtrend ever since then. But there is signs of life in this company chart, particularly in the last, say, 3 weeks. Share price got as low as 37.5 cents, and then we saw some really large volume coming in, and the share price took off over the next 3 weeks. The share price went from 37.5 cents to a current share price of 52 cents. And it does look like that could be the end of this downtrend. Wouldn't be surprised to see a little bit more volatility moving forward. Wouldn't be surprised to see the share price consolidating, because we would see quite a few shareholders buying at higher prices in the past 2 years since this company listed. So this company listed 2 years ago. So the current market cap of MLG is $75 million. Probably the other thing I should also mention, this company is founder-led, which is something a lot of investors do look for in these sort of companies. Not only that, the founders own more than 50%. And usually when the founders own or directors or management own that amount of shares, the shares in a company will be liquidly traded, but they're not quite as liquidly traded as you might expect. So this company had revenue of $175 million in the half-year report, so it's only 6 months, EBITDA positive by $16.5 million, and profitable by $2.6 million. So at a market cap of $75 million, I think there might be some investors out there who are seeing value in MLG Australia, or maybe it's MLG Oz, or maybe MLG Australia. We're going to have to do a little bit more research on this company, because it does look intriguing just based off the trading in the past 3 weeks, just based off the nice share price action with higher volume, and the very fact that this company is profitable helps as well. That's all I have for this technical update, 2nd of April 2023 edition, looking at EML Payments and 8 other companies on the ASX, including a few I have not featured in one of my videos before, including MLG Oz or Australia, a company I might have to do a little bit of research on, because it does look intriguing what I saw in the chart and what I've seen in the half-year report. If you have any questions, any thoughts about companies I featured in today's video, I'd love to hear about them, so leave them in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.